Hello, this is Mike Swanson. I run the website WallStreetWindow.com, and today I want to show you a couple interesting charts when it comes to financial markets. I haven't done a video now on YouTube for several weeks, and that's because there hasn't really been anything noteworthy enough for me to share with you. That has changed. This may end up being one of the most fascinating weeks in the financial markets. In fact, it could actually become a turning point. Uh, and I'm all about finding these turning points, identifying them, and getting into them early. It's not about predicting the future, but seeing when things change and then getting in early when they do. All these people who try to feed you stock market predictions and tell you, this is going to happen in the future, so get in now. Um, that's a lot of nonsense. And the real trick to being a winner in the financial markets is to focus on beating the markets. And that means being in things that are beating the markets, outperforming the S&P 500. That's how professional money managers think. And that's how you should think if you want to make sustainable gains in the markets and not flash in the pan bets. So that means you don't want to be doing what everyone else has been doing. The NASDAQ has been awful this year. It's down over 33%, I think 36%. Popular fad stocks are down more, and so are fad funds, such as the ARK ETF. So if you're looking for a video in which someone's going to tell you, double down on Facebook or buy ARK, this is not that video. And Kathy Wood is the opposite of the type of philosophy I have when it comes to trying to make real investments in the market. What has she done? Feed you nonstop predictions. Inflation's going to go away. This innovation is going to happen, and this little weird stock is then going to go crazy. And let me show you what's happened with their fund. Then we'll go on to where the opportunities are and why this week may actually be a key turning point in these markets, but not how you may think when you hear me say that. Okay, now here is the ARK ETF, and what I want you to notice is there's an indicator on the bottom, ARKK colon SPY. That is a relative strength ratio. It's dividing the price of ARK with the SP 500. When that ratio goes down, which it's been doing for more than a year, that means that ARK is lagging the SP 500. Stocks, sectors, funds which lag the performance of SP 500 tend to decline more than SP 500 does when it falls. And then when the market rallies, don't rally as much. They act as millstones on an account. So look where ARK is now, right on a 52-week low. And it barely rallied in October while the Dow had one of its best months ever. And on Friday, ARK was down 2.71%, while the Dow was up over 400, SP 500 are up too. This is not the kind of thing you want to get into. What you want to get into are things that have relative strength going up and constructive chart patterns. Chart patterns are things that look like they're in a position to break out, and then they can actually go up even if the stock market continues to go down as it has this year. So what is happened that's got my attention and making me do this video is the action in the commodities market. This is the price of silver, and I'm going to show you some other charts. I'm going to return to this. Why right now you're going to understand within a few minutes why this chart is the single most important chart I'm going to be watching this week. So silver went up almost 7% on Friday, while ARK fell almost 3%. But we won't talk about ARK anymore. Now, from January till today, till Friday, the relative strength ratio is higher. It's high. It closed higher Friday than began the year at. So silver has outperformed the S&P 500 year to date. But what I'm really interested in is what it's doing really the past several months. Silver did fall from April till right before Labor Day. Commodities pretty much declined across the board, except oil. Gold fell, mining stocks fell. But what happened was the stock market actually made a peak around the last week of August, a Jackson Hole meeting. And at that, even though silver went down too, it didn't go down as much as the stock market, and it's been outperforming the stock market since that Jackson Hole meeting. So if you look at the NASDAQ or the NASDAQ 100, you can see it's down since that Jackson Hole meeting, the third week of August. NASDAQ is the NASDAQ 100 is performing worse than the S&P 500. But although NASDAQ's been performing worse than S&P 500 all year, it bounced Friday. It's still doing, it's down pretty well off where it was in Jackson Hole. Meanwhile, silver though is perked up. I'm gonna turn to silver in a few minutes, and you'll understand why I'm really watching it. Gold also perked up Friday, and it's got a low recent support 1625. But if we look at the price of energy, oil, it rallied Friday. It's also been outperforming since that Jackson Hole meeting. So has the broad-based Commodity Research Bureau Index. Now, the U.S. dollar index also, although it's done really well this year, it took a hit on Friday. And I want you to step back and let's think about what has been happening this year. Inflation has gone up. The Federal Reserve has raised interest rates to try to beat inflation down. They've risen rates around June. They started to increase the pace of those rate hikes, announce it. That's what really beat gold down, is when they started to raise the rates by 75 points. Now, last week, they raised rates by 75 points and then said, look, in the summer, it's probably going to be 50. We're going to slow down. And that slowdown is what has caused the dollar to start to weaken. It looks like the dollar could be forming a top here. Support now is 109, but it took a hit Friday. And it's lower now than where it was when it made that Federal Reserve announcement. And that's what's helped perk gold up off the low, because gold tends to trade opposite of the U.S. dollar index. And meanwhile, we can look and see that, the Swiss franc, if the euro, if it can get above 93, it would be breaking out. The Swiss franc's in a similar position. So a lot of global currencies are in a position where they could rally if they can get through the highs of the past 2 weeks. And so that's where we're at. We're in a position where if the dollar breaks the low of the past couple of weeks, it's likely to tip over into a decline. And these other currencies could break out. In gold, if it closes, let's say above the high of October or it's over the 50-day moving average, or just say 1,700, then that's positive. But in gold stocks did something interesting. Newmont, Barrick, a couple of them had a big down days on Thursday, but then reversed on Friday, and the GDX is close to clearing resistance set, let's say 26, the high of October, the high of September, clearing a base. You could draw a basing pattern of the highs of September, October, November, a little bit right around 26, right below it. It's in a position where it could clear that. That would trigger buying. So the US dollar index could be faltering because the Fed is slowing the rate of its interest rate hikes. And we'll return to that notion in a few minutes. First, I want to talk with you about silver. Why is silver so important? Well, silver broke down in June, right at the end of June. And when silver broke down, I said in updates that were written, I think in videos too, but that look, this is bad for gold. This is bad for mining stocks because the action in silver tends to kind of give a red light or a green light to speculative activity in small cap mining stocks and in larger mining stocks. So when silver broke down, that was a warning sign that, look, the liquidity was probably going to dry up in small cap mining stocks. And that is exactly what happened. But now, if silver can close above 21, we will have a green light. So if silver can close above $21 an ounce this week, we will have a green light for mining stocks, including junior mining stocks, including bigger things like gold and commodities across the board. And all this is heavily influenced by the US dollar index, because when the dollar goes down, that is positive for precious metals and commodities. And the dollar, I think, is in danger of forming some sort of top with this reduction in the pace of rate hikes. And the reason why is this chart here. This is very troubling. So this is CPI inflation, and everybody knows, that inflation has shot up. It was a year ago that we were told that inflation's at levels not seen since like 1980 and the 1970s. That was a year ago. Now, I want you to think back to the first quarter of 2021 and what you were told then by the Federal Reserve, by the Biden administration, by the gurus like Cathie Wood. They were telling you that CPI inflation in 2021 would appear in that summer because of the supply chain issues and the economy reopening and all this. Well, what happened? They said it would go away, and it did not go away. We knew that. We saw that. Everybody realized that by October last year. And what happened? Instead of going down, the CPI on this chart went up to even higher highs and continued up and up and up until the spring of this year. And so inflation went up instead of going down. And that's what has hurt the stock market so much this year. And it's what's forced the Federal Reserve to raise interest rates. But here's the thing about it and why it's sort of shocking. I thought inflation was going to go up, and it did. I didn't believe the gurus. I was thinking that around New Year's, I was thinking, look, we're probably heading to a situation like the 1970s. And I had in mind what happened in 1974. In 1974, gold went up, silver went up, but the stock market went down, interest rates went up, and inflation did go down too. And then in the next year, the bear market and the stock market ended, and the Fed actually reduced interest rates because the CPI went lower than the Fed funds rate. I thought that was sort of what was in play. And gold did go up in the first quarter, but then the Russian war happened and commodities kind of had a peak there, and then the Fed got more aggressive, and that aggressive stance fueled a rally in the dollar and the pace of rate hikes, but the Fed was doing was greater than any other central bank around the world. Now the situation has changed. Now the Bank of England is raising rates by 75 points. The Fed says 50. And the European Central Bank is positioned to start to get more aggressive in raising interest rates. That's why the US dollar index is probably topping out. These other currencies can go up, which would be bullish for gold now and silver and commodities across the board. Now, here's the thing. Currently, the CPI is 8.1%, and the Fed funds rate is just around 4%, and they're saying it's going to get to 5. It's still below the rate of inflation, and the inflation rate has not gone down in a meaningful way. So that's why what I thought, that's where what I thought could happen has not happened, because I thought inflation would go down this year because the Fed would raise rates, and it hasn't. It's barely gone down at all. And now the Fed is slowing down the rate of rate hikes. So I'm forced to ask myself, when will it ever go down? And we look at the charts, and it looks like commodities are in position to go up. If they go up, it's not going to go down. The dollar tops out, it's not going to help either. Look, the US dollar index is up 15% year to date. And the euro and the pound and the yen and the yuan, almost every currency in the world is down because the US dollar against the US dollar index, because it's up 15%. And CPI inflation is 8.1%. In Europe, in England, it's over 10, over 10, over 10. The United States has actually had less CPI inflation than Europe, because the US dollar index helped. When if it wasn't for the US dollar index going up 15%, our CPI inflation would probably now be 9.5%, perhaps 10% like Europe. The point is that if the US dollar index is forming a top and starts to go down, that is going to make it harder for inflation to go down. In fact, inflation may start to go down or be worse in the United States than it is in Europe. So so many problems with that. It's for a whole nother discussion, but I would just point out that everyone obsesses about the stock market. That's all they talk about, on the financial media in the United States. But the bond market is in a terrible bear market, and it was down Friday. If inflation picks up, it does not even go down, much less pick up. The bonds are going to continue to go down. So we're in a potential really period where a lot of interesting things could start to develop in the financial markets. And I'm just telling you that this could be a key week for commodities, for the US dollar, for gold and silver. And watch what silver does this week. A close above 21 will tell us that this is a key week. Last year, it was really September that was the key month, perhaps August, because the inflation data in those 2 months was not improving, getting worse when it was supposed to improve, and that they were predicting, it did not. And if you go look at politics, that's when Biden's poll numbers began to slide and the Democrats' poll numbers began to slide. It was when inflation intensified and did not improve, do not go down, as had been expected by so many. And it's making people suffer more than stock market declines. Inflation hits everybody, at the gas pump, at the food store, at the grocery store, everywhere. And it's worse. It affects people immediately every time they spend their money, whereas the stock market declines does not affect everybody in the country, and it's not an immediate effect. So the inflation is really devastating, and that's what's hurt the Biden administration so much, and it hasn't gone away. It has not improved in any meaningful way, and that's pretty shocking when you consider what has transpired with the stock market this year, and we have seen interest rate increases. But look, history shows inflation does not go down until the Fed funds rate gets above the CPI inflation rate. and we're still so far away from it. So perhaps that's ultimately why things have not improved. But the reduction from 75 to 50 coming in December is what appears to be the fuel for a commodity, precious metals, big rally. Put it this way: the fuel is there. The rockets are fueled up. Will they launch? It's up to silver. Will silver close above 21? So a lot of stuff we'll be watching this week, and it's going to be fascinating to see how this plays out. And if silver does close above 21, there's other ramifications I'll be talking about in other videos too. So look, like this video so I'll know to do another video update sooner than later. And if you're new to my videos, hit the subscribe button and then hit the bell next to that button, and then YouTube will send you an alert as soon as the next video is up, and I'll be talking with you later.